So let's have a look at this question. Like I already said, it's a practice question from UNISA. So let's go through it. It says you are an audit senior at Green Pen Incorporated, a firm of registered auditors. You are a member of the audit team performing the 31 March 20X1 year-end audit of Fully Furnished Limited. So you have to identify the parties in the question. So this Fully Furnished Limited is the client, and you are working at Green Pen Incorporated. So the company is an upmarket yet affordable online home and living store that focuses on selling their goods to young professionals in South Africa. Fully Furnished only purchases goods from selected local suppliers. So the goods include beds, tables, chairs, appliances, and home accessories. So let's read the background information. But before I read background information, let's go on to establish what exactly is required, so that when you read the background information, we are able to highlight some important points. Okay, so required number 1, with reference to background information of fully furnished, identify the risk indicators at financial statement level. At this point, I'm sure you guys are familiar with risk of material misstatement at financial statement level and at assertion level. Are you guys both comfortable with that?
I'm comfortable with it.
Okay. Amanda, if you were to put it in words, how would you explain it?
At financial, the risk of material misstatement at financial statement level, it's when it affects the whole financial statements, and when it's at assertion level, it only maybe affect one transaction, let's say sales or cost of sales.
Thank you so much. That's correct. So risk of material misstatement at financial statement level, it affects the entire set of financial statements. And at assertion level, it would be risk relating to a particular assertion, right? So this is in terms of ISA 315. So the next question then says, okay, so the first one, we're supposed to identify the risk indicators at financial statement level. Very important, right? So what this means for you is, if you go on and pick up any risk indicators in your scenario, you're not going to get the correct answers. You have to identify risk indicators at financial statement level. And then for each risk identified, for each identified risk indicator, describe the risk of material misstatement at financial statement level for the fully furnished group for the year ended 31 March 20X1. So this is the format that we are expected to use. You have to answer your question in a column, in 2 columns. So in the first column, you have risk indicators. So these are the indicators at financial statement level. And then in the second column, then we are expected to then describe, so to substantiate on the risks that we have identified. Okay. And then I just want to quickly just browse through the question. Oh, okay, cool. So we'll just see how much we can cover, but it doesn't really look like a big question. So we're going to try cover the whole question. So now let's go look for those risk indicators at financial statement level. So we're going to read this question together. And as we read it together, I want you guys to stop me whenever you identify a potential risk at financial statement level, okay? Are you
okay?
All right, cool. So the
Sure.
background information, and it says here that Fully Furnished is listed on the Johannesburg Stock Exchange. So it's listed on the JSE. And in the previous financial year, Fully Furnished operated from one central house in Cape Town, okay? And due to Due to significant growth in the previous financial year, 5 new warehouses were opened across the country, in the current financial year. So the company has had to expand. Depending on the location of the customer, goods are dispatched from the respective warehouses to customers via the postal service or fully furnished fleets of delivery vehicles. So the company has delivery vehicles. And fully furnished is the holding company of packaging solutions, and it has control over packaging solutions. So if fully furnished is a holding company, then packaging solutions would be the subsidiary, all right? So you have to know your parties in the question. Packaging solutions is supplying all the packaging materials for the goods to fully furnished, and both companies are audited by Green Pan and have the same financial year ends. The CEO of Fully Furnished, Mr. Stein, is going on leave from the 17th of April 20x1 to the 15th of May 20x1, and has requested that the audits of both the companies, which is the holding company and the subsidiary company, are completed by no later than the 16th of April 20x1. So this means that you guys as the auditors only have about a month to complete this audit. That is from, yeah, I'm assuming that it's about a month, because we're not really given the date in which you are starting the audit, but you are given the date in which you are expected to be done with the audit. So the question goes on to say, this will put the audit firm under extreme pressure.
Yes.
Indicated that, and then he indicated that bonus payouts must be finalized before he goes on leave. So this guy also wants a bonus before he goes on leave. And in accordance with fully furnished remuneration policy, all bonus payouts for senior management are based on audited profit before tax. So these people, according to the policy, they do not receive a bonus unless the audit has already been done. But this guy wants a bonus before the auditors have even done their work. In the audit planning meeting held on the 30th of November 20x0, the CFO, Mr. Chair, indicated that Fully Furnished changed its accounting system during the year and transferred all transactions from the old accounting system to the new accounting system. During the meeting.
Before we move on, can you please highlight that one that says they moved from the old system to a new system, transferring that?
Cool. Okay, so I'm going to highlight this. All right. So during the meeting, it also came to your attention that Fully Furnished did not comply with Section 45 of the Companies Act number 71 of 2008 when providing financial assistance to its directors during the year. So when directors receive financial assistance from the company, this must be done in accordance to the provisions of Section 45 of the Companies Act. And these provisions were not complied with. So this means that the directors were able to just take loans whenever they wanted to get loans, right? So that's what happened. And the CFO indicated that management is aware of the non-compliance, but they do not believe it is necessary to comply with all the requirements of the Companies Act. That's also a red flag, right?
Yes, yes.
So we need to be able to pick up these red flags before you even start answering your question. You have to highlight these red flags, and then answering your question will then become easier. Then Fully Furnished is currently a defendant in a major court case. So they also have a major court case. And during the year, Fully Furnished sold defective tumble dryers to various customers. 8 customers are suing the entity for damages that arose from the tumble dryers exploding and causing their houses to burn down. The CEO fears that the litigation may have a substantial negative impact on fully furnished future business relations with the public. So there's a lot going on in this question. There's a whole lot of red flags. But when you answer your question, you have to be as relevant as possible. The question asked for risk indicators at financial statement level, not at assertion level. So I'm gonna scroll up and let's go through it. What stood out for you guys? And also remember, you also must be able to substantiate. You must be able to fully substantiate why you think something is a risk indicator. So yeah, what were your red flags? What were your risk indicators and why? Any attempt, guys? Remember, yes, Kutle?
So I'm not sure about this, but I'd like to think that being listed is one of the is a risk. The reason being that because they are listed, they'd want to make sure that their statements are of a higher level so that people, perhaps like investors and customers looking at the GSE, they may see them as doing well or performing well.
Absolutely. That's a good one. Amanda, do you agree?
Yes, she's correct.
Yeah. So being listed on the JSE itself is a risk indicator of risk of material misstatement at financial statement level. And the reason is the annual financial statements may be materially misstated for various reasons. There's a whole lot of stakeholders involved. So that means there's a whole lot of pressure for these annual financial statements to look good. So there's a whole lot of risk indicators when it comes to just being listed on the JSE. So that's a good one. Is there anything else? Remember, guys, when you answer your question, you also have to look at the mark allocation. Okay, so let's go back and see how many marks have been allocated to this question. So this is about 18 marks allocated to this question. So surely there's a lot going on that we can talk about. You guys agree?
Yes.
Yeah, let's go through it, guys.
Another risk that I see when I said you must highlight the deadline, the pressure that was indicated by the CFO to say he needs a bonus before he goes on leave. So that's another risk because he's putting pressure, the work of the internal auditors. It will not be according to standard. They will have to pressurize themselves to finish.
Absolutely.
Before he goes on leave.
Absolutely. So placing pressure on the audit team, but very important, you said internal auditors, but at this point, you are dealing with auditors and there's no internal audit function. So just take note of that, okay? So you're dealing with auditors, not internal auditors, right? So anyway, correct, yes. Placing unnecessary pressure on the audit team will affect the quality of the audit. So that's a good one. So there's two things happening here. There's the fact that he's placing pressure on the audit team to be done by the 16th of April. So he's saying, I don't care what happens, but can you guys be done auditing by the 16th of April? That'll compromise the quality of the audit, number one. Number two, there's the issue of the bonus. This bonus that he wants to receive before the audit has been completed. So also that's a different, that's a different point altogether. All of these things will compromise the quality of the audit, and that could then potentially affect the entire set of financial statements. So yeah, thank you for that one. Is there anything else?
And also that one of the new system. Financial statement might be misstated because of errors. The information might not be transferred completely or accurately to the new system.
Absolutely. That's a good one. Yes. So if there has been a change from one system to another, if this transition is not done correctly, then some information can go missing, and that can ultimately affect the entire set of financial statements. So from an auditing perspective, I know you guys are also auditors. I mean, there's a chapter where you deal with program change controls. Are you guys familiar with that? I think it's general controls. Are you guys familiar with general controls? There's actually a whole chapter on that. There are certain steps that must be followed when a firm is changing from one program to another. And if this is not done correctly, then information can be lost. And when information is lost, then the entire set of financial statements could be materially misstated. So do you guys get what I'm saying?
Yes.
Yeah. So that's a good one. Something else? Keep them coming. Remember, we have 18 marks. We need to secure 18 marks. So keep them coming.
Couldn't the fact that they don't believe in complying with the Companies Act be also a risk that there are other procedures or requirements that they were supposed to follow that they didn't relate, which results in our financial statements being materially misstated?
Absolutely. Absolutely. Non-compliance with the Companies Act, it goes to show that generally these people lack integrity. These people that are responsible for preparing the financial statements are generally not people of integrity. They are not honest. And how can we rely on the information that these very same people produce? We can't rely on the information that they produce. We can't rely on the annual financial statements that they prepare if they lack integrity. So yes, that's a good one. Thank you. What about the court case? What about the fact that they're being sued?
Oh yes, that litigation.
Yeah. How can that affect the entire set of financial statements?
It will affect their publicity. Investors or clients might not be interested in their business anymore.
Absolutely,
because of
reputation, right? So there's reputational damage there. And if there's reputational damage, what happens? They may lose customers. And if they lose customers, then they have incentive to, to make their business look good. They have incentive to make their financial statements look good so that they don't lose their potential investors and customers. So there's a lot of risks here, guys. We can't go through all of them, but you guys literally have to be able to pick them up in a question. Like when I read a question, before I even go down to read the required, I already pick it up. I already pick up these things to say, wait a minute, what's happening here? Why is there a tight schedule? Why is there litigation going on? Why is there a change of systems and all of that? Why is there non-compliance? Before I even read the required, I already know what the red flags are. So when you train your mind to read your question like that, answering the question becomes a whole lot easier. The question that you get may not even have a risk of material misstatement question, but when you train your mind to pick up these things, whether or not you get a question on risk of material misstatement, you are still trained to pick up the risk of material misstatement, either at financial statement level or assertion level. You get what I'm saying, guys?
Yes.
Yeah. So
Yes.
any questions here? Is there anything in particular that you need clarity on, or you want to discuss before we move on to the next question?
I have two things, right? So firstly, so you just mentioned the litigation part, right? So
Yeah.
when you mentioned this, would it be wrong to mention that they would like, would it be too specific to say that perhaps like the company won't want to recognize the law, the cases that they have, which is, I think they should be like contingent liabilities or something, as to understate their liabilities? Will that be going into much detail, or in the sense that would I be now referring to like the assertions of type of thing?
I think that would be more of an assertion thing, and that's a very good one that you're bringing up. It would affect a specific account, and I think this one would be a liability. So
okay, so if I were to go into detail, that would also the reason, I could use the reason both in the financial statement level and at the assertion level.
But at the financial statement level, you'd have to substantiate. You get what I'm saying?
Well, yes.
At assertion level, also, you then go on to say these people may have an incentive to not disclose that they have a court case going on, you know. So that's a good one, but then it would then affect a particular account balance, and that would be liabilities. They would understate their liabilities and not disclose that they, you know, there's a contingent liability.
Oh, okay. No, that's fine. Thank you.
All right. Anything else? So you guys are good here?
Yes, I'm fine. Well, just to like to say thank you to Zintle, because what she just mentioned right now, if we were to be asked to say at assertion level, now we used her reasoning to say, okay, they might not disclose the litigations.
Absolutely. It's actually a very good point. Yeah.
Yes, thank you, Zintle.
Good.
Sorry.
So let's read.
No, it's fine.
Yeah. So number 2 says, with reference to the delivery vehicles of fully furnished, describe the risks of material misstatement at the assertion level relating to the delivery vehicle's balance in the statement of financial position for the year ending 31 March 20X1. And for each risk identified, for each risk described, identify the applicable audit assertion. Okay, so now we're getting into assertions, and this is how we're supposed to answer. We're supposed to present our answer in two columns. Column number 1, description of the risk of material misstatement at the assertion level, and then number 2, or rather column B, then that's when you mention the particular assertion. Okay, so before we get into this one, which cycle does delivery vehicles fall under? Is it the revenue cycle? Is it the purchases and payment cycle? Is it inventory? Which cycle is this? I know the question is not relevant for this particular.
It's the sales cycle.
The
sales cycle.
The sales.
I mean revenue, sorry.
Isn't it the finance and investment?
Yes. Yes.
Why though?
Okay. So let's talk about the cycles, right? We've got the revenue and receipt cycle, okay? And that particular cycle consists of sales. We've got the purchases and payment cycle. So that's when the company is buying stock or whatever. It could be, for example, it could be not necessarily stock, because if it's stock, it would be the inventory cycle. So the purchases and payment cycle, for example, is when the company is buying maybe just stationery that they're going to use, or whatever that the company needs, right, to use for consumption within the company. So they are not selling. Then there's the inventory cycle, where the company is buying to sell at a profit, or manufacturing in-house and then selling at a profit, okay? Then we've got the payroll, and so that we've got payroll, and I think it's payroll, and I forgot what it's called, but yeah, it's got to do with payroll. Then there's the finance and investment cycle. Okay, so let's talk about the finance and investment cycle. In this particular cycle, it consists of every single thing that goes onto your balance sheet or onto your statement of financial position. So that would be, well, it's everything except inventory, because inventory has its own cycle. Are you guys with me?
Yes.
So everything
Yes.
on your statement of financial position will fall under the finance and investment cycle. So let's talk about the things that are on the statement of financial position. What's there? We've got PPE, property, plant, and equipment. That would fall under finance and investment. We've got loans. We've got capital. We've got vehicles. We've got investments. So you can get a question that will ask you to perform an audit on any of those things. And if you don't know what this particular asset, if you don't know in which this particular asset will fall in, like the particular cycle, then you may struggle to perform an audit on that particular asset or liability. So to answer your question in a nutshell, every single asset, every single liability, owner's equity, all of that falls under the finance and investment cycle, except the inventory, because inventory has its own cycle. So if you go to your textbook, okay, if you go to your textbook and you go to the chapter on the finance and investment cycle, you'll see what I'm talking about. Under PPE, you will have, like I said, property, plant, and equipment. So if the question had said with reference to the land, then that would fall under the finance and investment cycle. If the question had said with reference to the loan, that would still fall under the finance and investment cycle, because it's in your statement of financial position. You get what I'm saying?
Yes, I
Yes.
do.
You don't? Are you guys all clear, or is there a question?
All clear
I
my
just-
side.
Mm-hmm.
I just wanted to have clarity in terms of liabilities. They also fall under finance and investment, not payments and payment
No.
cycle, acquisition and
They
payment.
fall under the finance and investment. And the reason it's called the finance and investment is because if you picture your statement of financial position, it's got two parts. It's got assets and
Asset and liabilities.
liabilities and owner's equity, right? And
Oh, okay.
at the bottom, where you've got your owner's equity, which is your capital, and you've got your liabilities, that part at the bottom of your statement of financial position, that's the financing part. How do you bring money into the company? You bring money through capital, through loans, through issuing shares and all of that. So that's why that section then is finance is the finance section. And then investment section is assets. That's where you get your PPE, your land, your buildings, your property, your equipment, your bank, your investments, all of those. That's the investment section. So that's why it's called the finance and investment cycle. Do you guys get what I'm saying?
Yes, thank you.
Yeah. Usha, are you good here?
Yes, I am.
Okay. Cool. So with reference to the delivery vehicles are fully furnished, describe the risk of material misstatement at the assertion level relating to the delivery vehicle balance. And number 2, for each risk described, identify the applicable audit assertion. So, okay, let's go read. Delivery vehicles. So as indicated above, goods are dispatched from the respective warehouses to the customers via the postal service or fully furnished fleet of delivery vehicles. The fleet of delivery vehicles consists of leased and owned vehicles. So this fleet has a combination, it consists of a combination of vehicles that the company actually owns and vehicles that the company has leased. And the delivery vehicles are disclosed in the financial statements at cost less accumulated depreciation and impairment losses. Depreciation on delivery vehicles is charged on a straight line basis over its estimated useful lives, taking into account the residual values. So how they get to the balance of the delivery vehicles is cost less depreciation, less impairment losses, and there's also residual values that they also take into account. In the audit planning meeting, management discussed their concerns regarding the fleet of delivery vehicles. The CFO indicated that there is no supporting documentation for the estimated useful lives used in the calculation of the depreciation. So, okay, so there's no supporting documentation used for the estimated useful lives of the calculation for depreciation. In addition, several of the delivery vehicles are not in good working condition. The CFO has indicated that an impairment loss should be recognized for all the impaired delivery vehicles in accordance with IAS 36. Management decided to appoint an expert to determine the correct carrying values of the delivery vehicles. So these people are not even able to establish the correct carrying values of the delivery vehicles, and yet there's an amount that's appearing in their statement of financial position. The physical verification of the delivery vehicles was performed on the 31st of March at all the warehouses to ensure that all the delivery vehicles were included in the count. So we have to identify risk of material misstatement at assertion level and identify the affected assertion. So what do you guys have in mind? Are you guys there?
Yes.
Mm-hmm.
Since they're talking about leased vehicles,
Mm.
there is a risk that the finance lease vehicles are not capitalized as assets and the operating lease are capitalized as assets.
Yeah, absolutely. There's a risk that since there's like some of the delivery vehicles have been leased, so there's a risk that these leased delivery vehicles have been included in the statement of financial position. And yeah, so but which particular assertion would then be affected?
Isn't it accuracy?
Okay. Why accuracy? Is it accuracy or is it accuracy, valuation, and allocation? Because those are different things. Those are different.
Okay, can you explain the difference? Maybe I will understand it better.
Okay. The difference is that accuracy on its own is an assertion that relates to transactions, but accuracy, valuation, and allocation is an assertion that relates to account balances. So that's the difference between the two. So that's why I'm asking, is it accuracy or is it accuracy, valuation, and allocation? Because those are two different assertions.
It will be accuracy, valuation, and allocation because we're talking about account balances.
Yeah, thank you. That's what I wanted to find out from you. So if you just say accuracy there, your lecturer is not going to give you a mark. but you have to go on to say accuracy, valuation, and allocation. Is there another assertion that you feel would be affected, Kutle?
I'm thinking of valuation because they mentioned that they don't have a form of valuation when it comes to the like impairing of vehicles, since they only started having an expert recently.
Yeah. So these people had no proper method of valuation. So yes, accuracy, valuation, and allocation. So when you have a valuation issue and you're dealing with an account balance, so the affected assertion would be accuracy, valuation, and allocation, and not just valuation only. You get what I'm saying? But if you're dealing with a transaction, then you'd have an accuracy issue only. Do you guys understand the difference between the two?
Yes, now I understand.
Yes.
Yeah. So what else?
There could also be another accuracy, valuation, and allocation risk, in the sense of them having calculated the amounts wrong.
Absolutely. So the thing, when it comes to assertions, right? Like one assertion can be affected by so many things. You get what I'm saying? So there can be so many factors that affect completeness, for example, or so many factors that affect accuracy, valuation, and allocation. So when you get your question, don't think, oh no, I've already written accuracy, valuation, and allocation, and therefore there's nothing else relating to that particular assertion. There's a whole lot of factors that can affect one particular assertion. You get me, guys?
Yes.
Yes.
Yeah. So what else is there? What about rights? Tell me, is it rights or is it occurrence that would be affected here, and why? Is it rights or affect or occurrence that would be affected, and why? And I'm asking this in relation to the leased vehicles, the leased delivery vehicles. So we have established that there's a risk that these leased items, these leased delivery vehicles could be included in the financial statements. So there's an issue, there's an assertion that's affected there, and I want to find out from you guys, is it rights or is it occurrence, and why?
It is rights, because if there is an operating lease that is included on the financial statements, it's not supposed to be included, because you only capitalize finance lease, not operating lease.
All right. Why is it not occurrence? Kutla, do you have any idea why it can't be occurrence?
I think I understand what Amanda is going at, because I also thought it can be both, in the sense of if the lease is operating, then it will have to relate to an occurrence, because then at that point it would be a transaction, right? But then if it's a finance lease, then it would relate to an account balance. So it kind of applies to both. But in this case, since we're only really talking about balances, we'll assume that they're talking about finance leases.
Yeah, absolutely. So that's what I wanted to find out from you guys, that are you able to establish between occurrence and rights? But yeah, thank you, Kutle, for that. So is there anything else that's standing out for you guys that affects a particular assertion? Okay, I have a question for you guys. From an accounting perspective, how do we deal with leases? Do we not recognize a right of use of asset? Okay, but that would be an asset. Are you guys with me?
Yes, but I'm still trying to
Yes,
understand
I'm
your
still
question.
thinking.
Okay. Yeah, okay. So from an accounting perspective, you'd recognize a right of lease, asset, right of use of asset. Isn't there a risk that this right of use of asset could be overstated? Because it goes into the balance sheet.
Hmm.
However, we don't know whether these are finance leases.
Oh, okay. I think I understand.
Mm,
So are you saying that there's a risk that they would have recognized like both the operating lease and the finance lease under one lease, which is the right of use asset under like our financial statement, under our statement of financial position?
there's a risk that I'm thinking there's a risk that these people could overestimate the right of use of asset, because ultimately that would increase their assets. Yeah. So for example, if they are leasing just 5 delivery vehicles, they could somehow make the books look like they are leasing 10. And if it's a finance lease, then that would be a right of use of asset. But the question is not giving us enough information as to whether or not it's a finance lease or it's an operating lease. I don't know if I'm making sense. Because if it's an operating lease, then it would be an expense. And even then, there's a risk that this expense would not be recognized. Like these monthly rental expenses that they're paying, there's a risk that that the expenses would not be recognized.
Yes, I understand now. There's a risk that they might not recognize if they capitalize the operating lease. Now they won't be recognizing the expense because they'll be
Absolutely.
overstating their assets.
Absolutely. Absolutely. So guys, when you deal with auditing, don't forget that you're an accountant. Don't forget those accounting basics, because if you throw those accounting basics away, you're going to have difficulties. You must ask yourself, what do I do as an accountant? What do I look out for as an accountant when it comes to delivery vehicles? If they're telling me that there's assets that have been leased, what do you do as an accountant? You look for some expense to show that monthly rentals towards these delivery vehicles have been paid. You get what I'm saying? So you also have to apply your accounting principles into your question. Do you guys?
I just have a question.
Mm.
When you like here they mentioned the impairment. So I'm not sure how else to incorporate the impairment with like an assertion.
Okay, impairment would then affect valuation. It would affect the value at the end of the day, because if they're saying that a couple of vehicles are not in good working condition, you find a situation where now, I'm giving a typical example, you find a situation where now this delivery vehicle is worth say 50,000 rand because it's in a poor condition. But when you go to the statement of financial position, you find that they've written 500,000 rand. You get what I'm saying? Because the delivery vehicle has not been impaired. They have not taken into account the fact that this vehicle is not in good condition. It's in a very poor condition. So that would then affect the value of the vehicle. So that's why I'm saying the affected assertion there would be valuation. But remember, valuation doesn't go alone. It goes with accuracy and allocation.
Okay, I understand.
Yeah. So to make your life easier, like when you get a question like this, to make your life easier, just highlight every red flag when it comes to risk of material misstatement. Like I said, sometimes the question may not even ask you to talk about risk indicators, but when you have trained your mind to think along those lines, as you're reading your question, you already highlight the red flags. You already highlight the red flags. And then when you finally get to the required, it makes it so easy. You just basically just, copy those risk indicators from your question, and then you substantiate if you're required to substantiate. You get what I'm saying? So every single question that you get, you identify the red flags. And then you ask yourself, is this a financial statement red flag? Or is this an assertion red flag? I don't know if you guys get what I'm saying.
Yes.
So, okay, so I'm gonna take 2 more assertions and we'll move on to the next question. Let's see. So we've spoken a lot about accuracy, valuation, and allocation. What about, okay, we've also spoken about the fact that we've also spoken about the operating lease, if it's an operating lease not being recorded as an expense. So that would be, which assertion would that be?
I'm sorry, could you repeat?
Okay, so I'm saying we spoke about the fact that the monthly rentals that are being paid towards these delivery vehicles, there's a risk that these rentals are not recorded, right? So my question is, what assertion would be affected then? If you don't record something that you're supposed to record, which assertion is affected?
Wouldn't that be completeness?
Absolutely. That would be completeness. Okay. So
I have another question.
mhm.
So because here it mentioned that the physical verification of the vehicles were performed, does that mean that they scoped out existence?
Okay. It says that the physical verification of the delivery vehicles was performed at all the warehouses to ensure that all the delivery vehicles were included in the count. Please repeat your question.
Would that mean because they already performed like the physical verification, like which is like, I think it's like the same thing as a stock count? Would that then mean that you don't have to re-mention the existence? Because I was thinking that we would have to mention existence, since they have like, I think they have different
Warehouses.
yes.
Absolutely.
But here they
So
already,
yes,
but since here they already said that, so would I still need to mention it, even though they said that
you would
they
have to
have
mention it.
already?
You do have to mention that point. And I'm saying this because we don't know who carried out this physical verification, number one. Okay. It could be some junior staff in the company that was, given the responsibility of counting the vehicles. We don't know who counted these vehicles. So so we are not sure. You get what I'm saying? But I think had the question said the auditor was present during the physical verification, then I think we would rule that out. Do you get what I'm saying?
Oh, yes.
Oh, okay.
Yeah.
Yes.
We don't know who performed this verification, so we can't just rely on the information that we are given. So any other question, guys? Are you guys good?
Yeah.
All right.
Yes.
Cool. So the third question, which is also the last, it says with reference to the acquisitions and payment cycle. Like I already say, like I always tell you guys, you will not always be told which cycle you're dealing with. And excuse me, that's why it's so important for you guys to be familiar with the cycles. In this case, you are lucky that the question is telling you that with reference to the acquisitions and payment cycle, but you'll not always have it like that. So by the way, the acquisitions and payment cycle is also known as the purchases and payment cycle. Okay, so it's the same cycle. So then it says that formulate the test of controls that you will perform to test the manual and automated internal controls relating to the placing of orders. And if you use the auditing procedures, if you use the auditing procedures using test data to test the automated controls, limit your answer to invalid test data. Okay, so let's talk about this question. Let's start with the test of controls. What is your understanding of tests of controls? Anyone?
Just from my understanding, test of controls are basically it's an activity that you perform to check whether like the management's controls are effective.
And why would an auditor be interested in controls?
To check if the controls are working.
And if they are not working, how does that then affect the auditor?
It basically means that the auditors will not be able to rely on the financial statements. So they would have to perform more like substantive procedures on the risk of material misstatement of the financial statements.
Yeah, well, yeah, I get what you're saying, and you're absolutely correct. So if I'm an auditor, and so basically, remember, my job is to formulate a conclusion on the fair presentation of the company, So I have to come up with a conclusion as to whether or not the financial statements truly reflect the financial position of the company. And in order for me to come to that conclusion, I have to do a bit of digging. I have to investigate. So my starting point will always be the test of controls, all right? And if I find that the controls are ineffective, there's no way I'm going to depend or I'm going to rely on the information that these very controls produce. So I don't know if you guys are getting me. All right, so you guys have an understanding of tests of controls. Do you have any idea how they are different from substantive procedures? What's the difference between the two? Any idea? When I test a control, what am I looking for? What am I trying to establish? Yes, I'm trying to establish whether or not the control is effective and it has been consistent throughout the year. But what is my goal? What is my objective when I test a control? Any idea, guys? Okay, so let me take you through it. So when you gather evidence as an auditor, your starting point will be the test of controls, and then you will move on to the substantive procedures. If you feel like you can rely on the controls, then you're going to perform very minimal substantive procedures. But if you can't rely on these controls, like if these controls are completely ineffective or they have been inconsistent, for example, the controls were consistent for like 3 months during the year, and then for the rest of the year, they were not consistent, then I can't rely on them. So therefore, I'm going to perform a larger bulk of substantive procedures, okay? Now, coming back to the objectives of the test of controls, the objective is to make a conclusion on accuracy, valuation, and on validity, accuracy, and completeness. Do you guys get what I'm saying?
Yes.
Can you please repeat it?
Sorry, guys. I was saying that the objective of test of controls is to make a conclusion on the validity, its validity, accuracy, and completeness. Okay, so you're trying to establish. Okay, so we're going to have like a whole lesson on tests of controls. But for now, I want you guys to understand that substantive procedures have to do with assertions, and tests of controls, the objective of tests of controls is validity, accuracy, and completeness. So you want to make sure that is everything complete, is everything valid, is everything accurate. But when it comes to substantive procedures, you are testing like it. That's why they call them substantive tests of details. You are testing the details, the little details. Do you guys get what I'm saying?
Yes, yes.
So when you test a control, you test for validity. When we talk about validity, we are talking about little things like a signature. You get what I'm saying? So if there's supposed to be a sale, you know that someone has to sign that there has been a sale. There must be a clerk who will process the sale in the system. And this person then has to sign that, okay, I have processed a particular sale from a sale to whoever, whoever, or a particular company. And then that clerk must then sign that I have processed this particular sale, or I have processed this particular payment, right? So when I test a control, I will look for a signature when it comes, like on the order, on the, what do they call it? They call it, there's a particular name for this document. Yeah, it's an order, it's like an order form. I forgot the particular name, but yes. So you look for that form that the client has filled, and you look for a signature by the order clerk that the order clerk has processed the order. You get what I'm saying? So that's you testing the control. But when you test the detail now, you look at things like cutoff, you look at things like occurrence, you go deep. So that's why they are called substantive tests of details. But the controls are only concerned with validity, accuracy, and completeness.
Okay, thanks. It makes sense.
Are you guys okay?
Yes, thank you.
All right. So yeah, okay, so do you guys understand what they mean when they say automated internal controls? Do you guys understand what they mean by the word automated?
They mean controls on the system.
Yeah, they basically mean computerized internal controls, right? So you're supposed to test controls, the manual controls, as well as the computer controls. That's what they're saying in a nutshell, right? And this is relating to the placing of orders. And if you make use of audit procedures using test data, if you make use of audit procedures using test data to test the automated controls, limit your answer to invalid test data. So what would you do when it comes to the placing of orders? Perhaps let's go read more information on this. But generally, what is supposed to happen when an order has been placed? What do you think is supposed to happen when an order has been placed? So this is
It has to be authorized.
Wait. So this is that just to give you guys a bit of perspective. This is not the revenue and sales cycle. I mean, the revenue and receipt cycle. It's the acquisitions and payment cycle, right? So yes, you were saying.
I was saying the order, when it's placed, it has to be authorized by the supervisor.
Okay. All right. So you're saying that when an order has been placed, it has to be authorized by the supervisor. Give me more information. Who is placing this order?
What are they called? Is it buyers or order clerk? Yes, I think
Okay.
they are called order
Yeah.
clerk.
Yeah, absolutely. So let's read more information. It says fully furnished uses an automated ordering system to place all its purchase orders with selected local suppliers. And this automated system is protected by firewalls, which are also regularly updated. The following system descriptions for placing the orders, and I think they were supposed to say the following are the system descriptions for placing of orders and the receiving of goods are available. Oh, okay. So I'm the one that's reading it wrong, but all right. So it says that the warehouse manager, Mr. Red, who is based at the central warehouse in Cape Town, is responsible for requesting goods for all the warehouses. So we've got a warehouse manager. So guys, you have to know your people in your question. You have to highlight the names that, okay, there's a manager called Mr. Red, and he's based at the central warehouse in Cape Town, and he's responsible for requesting goods for all the warehouses. So this is his job, requesting goods. He signs a manual purchase requisition form as proof that the description and the quantities of the goods to be ordered has been approved. So he signs the requisition form. Can you guys tell me what a requisition form is?
It's the form that they use to request goods.
Yeah.
Or to create a purchase order on the system.
Yeah, absolutely. So this requisition, this purchase requisition can come from any department. It can be from HR saying, listen, we need more computers, or from, the warehouse saying we need something, we need more, whatever, or it can come from any department. Okay. So this requisition is, okay, so it says he signs a manual purchase requisition form as proof that the description and quantities of the goods to be ordered has been approved. Right? So what did I say signing is? It's validity. So if I find a requisition and they tell me that an order has been placed, when I test a control, I'll look for the signature, because if I don't find a signature, it means that this order that has been placed is not valid. You get what I'm saying? It could be a fictitious order. It could be an order that Mr. Red has placed for his personal household. Are you guys following?
Yes.
To prove that,
yes,
for me to prove that whatever that has been ordered did not go to Mr. Red's household or to some other staff member's household, I must find a signature of approval for this order. And that's me testing for validity. And that's a test of control. So that's how they are different from substantive procedures. You are looking for validity, you're looking for accuracy, and you're looking for completeness. Those are the only three things that you look out for when it comes to tests of controls. So the question goes on to say that once the buying department has received a signed purchase requisition from Mr. Red, orders for goods are placed electronically by fully furnished ordering clerks on sequenced pre-numbered purchase orders. Why are these purchase orders sequenced, and why are they pre-numbered? And must they always be like this? Is there a specific order? What's going on? Any explanation?
Wouldn't it be for the reason of checking completeness? So let's say, for instance, you only find that in your forms that you only have 1, 5, 6, 7, 8. So immediately you'll be alerted of a missing request form or document.
Absolutely. Thank you. Yeah. So in order to ensure goods are obtained at the best price and desired quality, orders may only be placed with an approved local supplier. Approved local suppliers are added to the master file. What is a master file, guys? Any idea?
Is a system that information is stored in.
Absolutely. So a master file can be an inventory master file, which keeps all information relating to inventory. Or if you're dealing with the acquisition and payment cycle, the master file would contain all information relating to acquisitions. If you're dealing with the finance and investment cycle, the master file would, contain all information relating to the, the assets and liabilities. Okay, so that's what a master file is. It's like an electronic file. Okay, so it says that these approved suppliers are added to the master file once the acquisition committee has approved the suppliers at a meeting. When capturing the electronic purchase orders, the ordering clerks choose the applicable supplier from a drop-down menu before capturing the required fields. For example, the item code, the product description, and the quantities of the goods. So when they place these orders, they select the supplier on the system, and then they input the information, the item code, product description, and quantities. Then the computer performs automated checks to confirm that these fields are captured correctly. An error message appears on the computer screen if the fields are not captured correctly. For example, if you go on the system and you put in a wrong product description, and there will be a pop-up message that says you have put in the wrong product description. Okay, and then the computer automatically draws the prices of the ordered goods on the purchase order from the electronic supplier list, which includes the latest approved prices. And once the prices have been completed on the purchase order, it is ready for approval by the acquisitions manager. So there's two people that they spoke about. There's the warehouse manager, who's responsible for requesting. His job is to request. And then there's another person that they speak about, the acquisitions manager, Mr. O'Hare, and he is responsible for approving. So there's one person who requests, and then there's another person who approves. And then Mr. O'Hare approves all the purchase orders electronically by entering a unique username and password. So that means that not everyone can go into the system and do whatever they want to do. They can't process an order without Mr. O'Hare's password. And then passwords consist of 10 characters comprising of a combination of alphabetic characters, numerical digits, and symbols. And after approval of the purchase order, a copy is emailed to the supplier. So I'm assuming that this is the part where the supplier will then deliver the required order. And yeah, so one thing about test of controls, guys, you do not test controls which are not there. Okay, so you only test the controls that are there. For example, they've given you so many controls in this particular section. Control number 1, there's Mr. Red who signs a purchase requisition. That's the first control. How do you test that control? Also taking into account the objectives of testing your controls, which are validity, accuracy, and completeness. And when I talk about validity, I'm talking about anything that proves approval, anything that can indicate approval. Are you guys still with me?
Yes.
Yeah.
Yes.
So I'm not going to, like when you test the control, I can't formulate my own control in my mind and then test that non-existent control. I can only test the controls that this company has. Are you following? So if they're
Yes.
telling me that there's Mr. Red who signs manual requisition forms, I can't say I will select the manual requisition forms and look out for the signature of Mr. Red, because the question would not have told me that. So you don't formulate your own controls. You test controls which are there in that particular system. So let's make it easy. Let's start by identifying the controls. Let's do it that way. And then we're going to test the controls together. So I'm going to give you guys a second. I'm going to give you guys a minute to read. And when you pick up a control, tell me what you see. I'm going to highlight the control, and then we're going to talk about how we're going to test this particular control. So controls have nothing to do with assertions. They have nothing to do with assertions, but they have everything to do with three objectives: validity, accuracy, completeness. That's why when you get a test of control question, you will never see the word assertion next to that question. They have nothing to do with assertions. And that's the difference between tests of controls and substantive procedures. The terminology is the same, everything is the same, except with substantive procedures, you're dealing with assertions. And with tests of controls, you're dealing with controls, and your objective is testing for validity, accuracy, and completeness. Are you guys still with me?
Yes.
Right. So I'm going to give you guys a minute to go through the, this paragraph. And when you pick up a control, let me know. I'm going to highlight the control, and then we're going to talk about how to test that particular control. Let's start that way. Let's start there.
So do we just mention them now, or like?
Yeah, I'm trying to like make it easier for us to test controls, but the starting point has to be identifying the controls, because like I said, we can't test controls which are not there in the company. So I want you guys to help me identify them, and then we're going to test them. Okay.
Oh, okay.
Yeah.
So I saw I'm seeing that they have like they have a master file with only approved suppliers.
Yeah, but let's start right from the beginning.
From the top. Oh, okay.
Yeah. Just pick up whatever control which you feel is whatever that you feel is a control. And then, yeah, let's start there.
The one that says the automated system is protected by firewalls, which are also regularly updated. Isn't it that a control as well? So we check if the firewalls are updated regularly.
Absolutely. That's a control. See, now you are testing a control which is there in the system. Because sometimes the client can tell you that, listen, we update our firewalls regularly. But when you actually check, and that these people last updated like 4 months ago. You get what I'm saying?
Yes.
Yes. So that's a good one. So that's a control. You have identified a control. Then how do you test it? How do you test this?
When they say the system is updated regularly, you have to check with their policies or their standard operating procedure. When they say regularly, what they mean, is it monthly or quarterly or annually? Then if it's like that, maybe there will be a report to say it was updated quarterly or regularly, or there will be a indication on the system with a date to say it was updated.
Absolutely. Absolutely. But now, okay, so that's 100% correct. But can you link it to one of the three objectives that I told you about? What would be the objective of doing that? What would you be testing for? Would you be looking for validity, accuracy, or completeness? If you look at your memo, right? If you look at your memo, this question that I'm asking you is not even there. But I just want you to, you know, to have like a deep understanding of what's happening. You know, you spoke about getting a report and all of that, but why would you be doing that? What are you trying to prove? Are you trying to establish that the systems are valid, or are you trying to establish that information is complete or accurate? What would be the point? Okay, so that would have to do with completeness. Because if they're telling you that we are regularly updating our firewalls and all of that, yeah, so that would have to, yeah, the objective of you then inquiring from management about their firewalls and all of that, the objective of you doing that is to establish whether their systems have not been subjected to, you know, whether their systems are protected and all of that. Because if your systems are not protected, then it means anyone can hack into your system and information can just go missing. So that, you know, that would affect completeness and accuracy also of information, because if there's no firewall, who can just hack into your systems and tamper with your information. Do you get what?
Oh. Yes, yes.
Yeah. Right. So what's the next control that's coming up?
The next control is the warehouse manager, Mr. Reid, signs a manual purchase requisition as proof that the description and quantity of goods to be ordered has been approved. So he approves the purchase requisitions. So that's a control.
Great. You have identified a control. How do you test that control?
You verify signatures of Mr. Reid. You will need to request a, what do they call it? Signature, whatever, to check his signature, if it's valid, if it's his real signature.
Absolutely. But now your problem is you're using the incorrect jargon. What's the correct word there?
Inspect.
Yeah. Because you
The
100% correct. You can be 100% correct and still lose marks for not using the correct terminology. So we don't check, but we inspect. So you would for signatures of Mr. Reid.
Okay, thank you. Thanks for reminding me.
Kutle, is there a control that's standing out for you?
The control of there being an error message when an incorrect data has been inputted.
Okay. Let's go a little bit. Let's scroll a little bit up, and can you look for a control there? Because you know the reason I keep on insisting that you start right at the beginning, right, Kutle? Is because if you start right at the end of your question, you may then feel like there's nothing else. Do you get my point?
Okay.
Write your answer and you start picking up details from like in the last sentence. You may feel like there's nothing else to talk about. So you have to start right
Oh, okay.
at the beginning and try to identify something right at the beginning.
Oh, okay.
Yeah.
So then
So
can you
yes, like
mention
so. Mhm.
the sequence, the pre-numbered purchase orders?
Absolutely, that's a control. And then how do you test that control?
You can perform sequence checks in order to ensure to ensure that there's no missing request purchase order.
Absolutely. You have identified a control and you have given me a test of control. And the objective of that test of control would be completeness. So I know that these objectives that I keep telling you guys may not be necessary in your actual answer, but I want you guys to understand the difference between substantive procedures and test of controls. Test of controls have nothing to do with assertions. Are you guys realize that now?
Yes.
Yeah. So what's the next one?
Could I mention the presence of a master file that consists of approved suppliers?
Absolutely. Um, yeah, tell me more about it. Substantiate what you're saying.
So this would go to ensuring the validity of the suppliers, so that non-fictitious suppliers are not used when purchase orders are placed.
Absolutely. So you have identified a control, and the control is approved suppliers are added to the master file once the acquisition committee has approved the suppliers at a meeting. So you have given me a control, and can you test your control again? Please repeat what you've just said.
I'm not sure about how to go about testing it.
So your starting point would be inspecting the master file and to make sure that every order that has been placed is with is with an approved supplier.
What would you compare it to, like a, I don't know how to say, like what would you confirm it to? Yes.
You mean in terms of the objectives?
No, since you mentioned that you'd have to like check if the suppliers are approved really. Like what document would I request or have in order to ensure that the ones that are on the master file are actually approved?
Okay. So you would have okay, so if you're looking for a document, you'd have the purchase orders. So you'd get a sample of purchase orders and inspect, because on the order there should be a supplier's name. So then you inspect the purchase orders and go back to the inventory master file and check whether or not this supplier that's that's appearing on the purchase orders is there in the master file. You know what I'm saying?
Oh, okay.
Yeah. So give me more controls and let's test them.
There is something that says the computer performs an automated checks to confirm that these fields are captured correctly. An error message appear on the computer screen if all the fields are not captured correctly.
So that's a control.
That's a
How do you
control.
test it? How do you test this control?
I think you obtain all the purchase orders on, or you obtain all the purchase order on the master file, and check if all the fields were
You're
ticked.
still checking and not inspecting.
Yo. Ish. Yeah, okay. Then inspect if all the fields were filled. If not, then you have to verify if the error message. I think you have to reperform or like capture an order on a, what do they call it? Is it a demo system or what?
You'd basically you'd process an order, even though you're not really processing it, but you're just testing the control, right?
Yes.
You do
It will
that
give you
by,
an error message.
yeah, so you can do that by deliberately not entering some field. So for example, you can deliberately not enter product description or quantities. You are testing the control to ensure that, will this system really give me an error message that says a particular field has not been captured correctly? So that's you then testing the control. So this is how you test controls, guys. You don't test controls which are not there in the system. You look for controls in the system and you test those controls.
Okay.
Okay, so give me 2 more controls and then I think we will end the session. Yeah.
I'm not sure about this one, but like, can you comment on the use of a drop down menu field?
Yes. What would you say?
So for it, I'd say that the drop down menu ensures that the approved suppliers in the MasterCard, your master file are used, and then the test of control would be to inspect the drop down menu suppliers to the approved ones in the master file to ensure that the right ones are used.
Absolutely, that's a good one. And another thing you can do when it comes to the drop down menu is attempting to process an order without clicking that drop down. So you wanna establish what would happen if I just process an order without clicking the drop down. So that's you testing the control. And if I attempt to place an order without clicking the drop down and the order gets processed, it means that there's something fishy going on. And that means that I can't rely on these controls that they say they have.
Yes, you can also try to capture something instead of pressing the drop down, see if it will allow you. If it allows you, then you also, yes.
Absolutely, to just add a random supplier.
Yes.
Yeah, so if you do that and the system allows you to just include some random supplier, it means that you can't rely on these controls. So that's how you test controls, guys. You don't just come up with your own controls and want to include them in the system. No, it doesn't work like that. You identify the controls in that particular system. Remember, your question can be anything. And these tests of controls could come from any cycle. They could come from the revenue and receipts, inventory, acquisitions and payments, finance and investment. They can come from any cycle. So you just need to understand that, okay, I'm working with the controls that the client has given me. I do not test something which is non-existent. I test something which is there in the system. And for me to test this control, I first identify the control and ask myself, how am I then going to test the control? So I want one more control regarding the approval of purchase orders. Can you guys give me a test of control there?
Could you please repeat your question?
I want like a test of control that has to do with the approval of purchases by Mr. O. I think it's Mr. O'Hare or something. Yeah, I wanted a test of control that has to do with approval of the acquisitions. approval by the acquisitions manager. So I want a control that has to do with passwords. So, okay, so they say that passwords consist of 10 characters comprising of a combination of alphabetic characters, numerical digits, and symbols. So that's a control. I've identified the control for you. I want you guys to test this control for me.
You can input any made up password to check if it will allow you to approve an order.
Absolutely. Absolutely. So that's how you test the control when it comes to approval of the acquisitions. So yeah. So do you guys see how easy that is? Do you guys have
Yes, auditing made easy.
any questions? Are you guys good?
Yes.
Okay.
Yes.
All right. So that's it for tonight, guys. Thank you.
Thank you so much.
All right. So I'm
Thank
gonna
you.
send you guys I'm gonna send you guys some work to do tonight. Can you send it through during the week so that I have a look at it?
Okay.
All right. Good night.
Good night.
Bye.